I have 4 topics that I want to go over with you as a real estate agent that I happen to believe is going to be so imperative for each of you, no matter which property type you sell, no matter where your market is, it's going to be relevant to you and your business, both on the buy side and list side. All right, number 1, the first topic is going to be jumbo mortgages. Are they gone? Number 2, how agents can lose 30% of their business overnight by one major misnomer. Number 3, can you still close a transaction if someone's not working or not getting paid? And number 4, how should listing agents handle a mortgage denial being sent to them by a buyer side agent? Okay, so before I cover these topics, first and foremost, I want to thank all the real estate agents. You all are really unbelievable troopers. You're on the front lines. You're out there still showing property. You're doing what you're doing best, and you employ so many of us. So while we're so appreciative of all the healthcare workers and and law enforcement and firefighters and everyone, the truth of the matter is that the real estate agent community should be right there next to them, because without you, without your services, so many jobs are lost. So I just want to take a moment here to say thank you for that, from the bottom of my heart, from my team to you. The second thing I wanted to cover quickly was the rate of change that's happening in our industry, on the mortgage side and on the real estate side, of course, because of what's happening in today's world. And there was an industry expert that was on just 2 days ago, and I watched the interview, and it was interesting because it was kind of funny the way he said it. He said, there is so much change that's happening. It's by the day, by the hour, by the minute, by the second in some cases. And he said, the best way I can describe that is, last year was a very hard week for me. So think about that. Last year was a very hard week for me, meaning it's almost like so much change happened in a year's time, but it was only 1 week. Really, really fascinating to put it into perspective. Okay, let's get to it. Jumbo financing, is it gone? All right, folks, so let's first identify what jumbo financing is. So that is loan amounts that are in excess of $510,400. So $510,400. That's the conforming conventional loan limit in most counties, particularly our county, okay, and throughout Florida for the most part. All right, moving along from there. So any loan amount in excess of $510,400 is a jumbo loan. So here's the question, are they extinct? So over the past 3 days, a lot has happened as it relates to jumbo financing. So think of it like this, whether it's CrossCountry Mortgage, whether it's a lender you have a relationship with, no matter who it is, when a lender underwrites a loan and funds it and closes it, they in turn sell that loan to the secondary market. That secondary market are what's called investors, okay? So in a normal jumbo market where there's a lot of action, a lot of liquidity, there could be anywhere between 8 to 10 to 12 different investors out there buying the notes, buying the paper, buying it off the lenders. Okay, in today's world, I can tell you that most lenders, or a lot of lenders, I should say, has actually shut down jumbo financing, which is a little scary. Perhaps some of the bigger banks, perhaps some of the lenders that are local household names that you're aware of. So yes, a lot of lenders have taken that position because they can't sell the loan to the secondary market. There is a percentage that still is open for jumbo financing. We at CrossCountry are still open for jumbo financing. Now, with that said, if at one point we were selling to 4, 5, or 6 different investors, folks, we're limited down to about 1 or 2 major investors that can do the transaction. Okay, so the answer is that we can still close a jumbo loan, okay? Many in the industry, unfortunately, cannot today. Now, again, this isn't a personal promotion. There are some other lenders that can still close jumbo financing, but it's very limited. And what we mean by that is that the actual qualification component, right, that process is going to be a little bit more rigorous. The actual closing time frame of a jumbo loan is going to be extended because here's what's happening, folks. If you stop and think about it, that end lender who's going to buy the loan, they're saying, wait a minute here. What is their employment? How likely are they to stay with that employer? Because jumbo financing is different. It's not government backed, right? What are their assets? They gave us their brokerage account a month ago, but what is that value today? So a lot of these pieces are going to come and play a role. So now more than ever, if you have that jumbo transaction, okay, that jumbo buyer, the pre-approval process that is done up front is more instrumental than ever in my 21-year career. Okay, they need to be reviewed upfront in its entirety and matched with the right investor, which is only one or two left in the arena. Okay, so I hope that clarifies jumbo financing. It's still available. It's limited, but it is still available depending on who your lender relationship is with. Okay, number two, how can agents lose 30% of their business overnight due to a misnomer? Folks, you may have heard me say this in the past 10 days, and I'm going to say it here right now. Most lenders, household names, not just retail banks, have chosen to increase their credit score requirement as it relates to FHA financing. So if a lender says, okay, we only want 680 credit score buyers going forward, or we only want 660 credit score buyers going forward, that cuts out a tremendous amount of market share, meaning buyers that cannot qualify based on that lender's choice. Okay, FHA, for clarification purposes, has not increased their credit score requirement. FHA, with a 3.5% down payment, will lend and allow that lender to lend at a 580 credit score, and with a 10% down payment or greater, with a 500 credit score. All right, now, I can only speak for us over here at CrossCountry Mortgage. We are still closing transactions with FHA with those minimum credit score requirements. So where did I get 30% that an agent can lose? Folks, in South Florida, FHA accounts for about 30% market share. Think about that. And so when a lender moves a credit score to 680 or better, it's basically saying they don't want to do FHA because we all know that an FHA buyer has typically challenged credit scores and they're not over 680 or better. So that would mean if you're not informed on that, for every 10 buyers you interact with, 3 in without your fault would not qualify based on assumption. Now think about that. So for agents, both on the buy side and list side, it is so important to understand the difference because a lot of lenders, and I'm not saying this is intentional, but a lot of lenders can put off the disposition that it's FHA that took this position and not them as a lender. Now think about that. So if you have an existing lending relationship today, I always respect that. Why don't you just go ahead and text your loan officer and just ask them, what is your minimum credit score requirement for FHA? Okay, because that is going to cut out a huge percentage of potential market share. These are the buyers that we deal with. Our median sale price in Palm Beach County is between $350, $355 approximately, and about 30% of those buyers are FHA buyers. So we can't lose that market share based on myth, rumor, or hearsay. I took over 11 transactions just last week, that these listing agents, all 11, have received declines by other mortgage lenders due to credit score. And we're in the process of salvaging every single one of them. Don't lose 30% market share. We're here for you. Okay, number 3, can we still close on a transaction if someone is not working or not getting paid? Unfortunately, this is a very popular topic right now because of the amount of people that are not working. And on top of it, the amount of people that are not getting paid. All right, so I can speak on behalf of CrossCountry Mortgage. CrossCountry's position is we look at what the agencies allow. What I mean by agencies, Fannie Mae, Freddie Mac, et cetera. And then we basically adhere to what they will allow. And so we are a lender in today's world, which can be a great source for you, that will close a transaction if someone is currently still employed with the employer and not getting paid. So I want to give an example as to what I mean by that. Let's assume for a second that you had a buyer who works at Bloomingdale's. And of course, Bloomingdale's today is closed. Now, I don't know what Bloomingdale's structure is, but I'm just giving a hypothetical example. So now this buyer works for Bloomingdale's, and of course they're still employed, but they're not working and they're not getting paid because they were hourly. We at CrossCountry, what we will do is we will validate the fact that they're still employed. We will validate the fact that they can continue employment, and then we will close that transaction. Folks, many lenders are not taking that position, which is another reason why we need second opinions in today's market. Okay, that's a big one. I got referred a transaction the other week, and the buyer was actually laid off. Okay, well, in that scenario, if they're truly laid off and they don't have an employer, that transaction will not close, of course. They don't have employment. They're laid off. So at least in today's world, April 6th, someone who is unemployed does not have another backup. But what we're doing carefully there is we're asking the right questions to the buyer. We're saying, okay, is there mom, dad, aunt, uncle that can go ahead and hop on the loan to add more income to the application? Now is the time where you and me can get very creative and ask the right questions to make sure that deal is vetted through and through. I think we can agree every transaction counts today, now more than ever. And so you've come this far by showing the buyers their home. You may have showed them 10, 15 homes. You get under contract. You work this all the way through. I think a second opinion is very important. So big time on that. And number 4, this ties right in perfectly. How should listing agents handle mortgage declines? Okay, folks, here's the net of it all. What I've been trying to tell the wonderful agents that we're partnered with, and a lot of them are adhering to it, is the moment you get a mortgage decline, don't necessarily go in and sign a cancellation. Why do I say that? I say that because it is worth a second opinion. Now more than ever, you need a second opinion because you could be, the buy-side agent may not be aware, the buyer may not be aware, and the buyer may still want the home. And what's happening is that they're sending a calculation or a cancellation, I should say, based on myth, rumor, or hearsay. It could be the credit score requirement for FHA. It could be perhaps that lender doesn't have a jumbo investor to sell to. Think about that. There are so many other ways. It could be because that person is employed but not getting paid. And then on top of it, it could be, let's say, one of these non-QM loans, which are virtually extinct. However, we're in the process of saving one because we were able to add a family member for income purposes to the application to, in turn, get them closed. This is the type of creativity we need. So when you get that cancellation, give us a call. We're 7 days a week. We're 8 a.m. to 9 p.m. We can't tell you immediately on that first phone call we can do the deal, but here's what we can tell you. After gathering the income documentation and the information from the client, our typical review process is just hours. That's it. And now you have an industry-wide answer as to where that transaction sits and if it can still stay together. So I really, really stress that. I want to thank all of you again for attending here today and listening to me. Okay, I get a little passionate, of course, because I love what I do and I love what we all do. I want to also let you know that our process remains the same. It's a 7-day-a-week, 8 a.m. to 9 p.m. process. If you need people to get pre-approved, it's the same turnaround times. We're here. We can also facilitate transactions very, very quickly in today's market if that helps you and your buyer get a better transaction. And on the list side, if you get that decline and you refer it over to us, we can close virtually faster than anyone in the industry, which can remedy the seller's concern and issues right away. Thank you so much again, and our thoughts and prayers with everyone around the globe to a successful outcome, and may this end soon. Together in success.